Watching Master Trader Live. Simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Ray Capra and Dan Gibby.
Welcome, everybody. Today I am alone. Mr. Gibby has abandoned us. He's going to enjoy his 4th of July holiday and took off a little time early. So I'm sure he'll be missed, but we'll take it alone here. So today we're going to be talking about mastering advanced candlesticks. Is there such a thing as advanced candlesticks? Well, let's explore that and take a look at that. So we always go over this slide at the beginning to explain what Master Trader Technical Strategies is. So there's a lot of different ways to put whatever on your chart to try and determine the direction of prices. Are they going up, down, or sideways? We say price is king. Why? Because you take the prices off the chart, nothing moves. So that's what we trade. Price information in the direction, ideally in the direction of the trend, sometimes counter trend when they're climactic. Yes, Gary, it's being recorded. We send it out in a day or two. By the way, I don't know if anyone is here for the first time. If you'd let me know, because if you're here for the first time, welcome. Many come time and time again. We go over the same concepts. Good morning, Kim from Texas. So obviously we're going to be talking about candlesticks today. Why candlesticks? Can you do it in a bar chart? Yeah, absolutely. But they form pictures. There's nothing magical about candlesticks. They form pictures. I'll explain a little bit about basics of candles before we go on. Trend analysis is key because patterns alone can put you on the wrong side of what's happening there. So just because you get some kind of a reversal pattern doesn't mean it sets up a trade. And in multiple time frames. Sometimes price time frames are in agreement, other times they're not. When they're out of agreement, most times things are going to be erratic. The best opportunities are when you have multiple time frames in alignment. It's hard to get all of the, well, it depends on how many time frames you're looking at. If you look at too many time frames, you're going to get confused, inevitably. Support and resistance, important. We always say look to the left. And if it's your first time here, some of you are. We'll get to that. Now, volume. Some make a big deal out of volume. And I used to. I mean, you learn that you need volume increasing as prices are trending up, or if they're trending down, and retracements are on lower volume. And then over the years, I saw how prices could trend on low volume, and inevitably prices, as we say, are king and what we trade. And so if it's going up on higher volume and pulling back on low volume, that's great, but it's just not necessary. What's happening in the broader markets, like right now. And sometimes one market's going up on its own by itself. Other markets are going down when others are going up. And that's just part of what we have to review. Market internals and intermarket analysis. This was a big key to understanding why some trades worked and some trades didn't. But how do you determine that? Well, market internals tell us when too many traders are overly bullish or bearish, when prices have reached an extreme. So we talk about that most mornings when we do the pre-market, what's happening with sentiment and breadth. And breadth has been pretty bad lately. You're fuzzy on changing of the guard concept. Well, we don't really talk about that too much. It's kind of something from the past, but look, what does that mean? You had a green candle and now you got a red candle, or vice versa. Location and trend are the key. Now, position and money management, believe it or not, this is what the majority focus on the least. And it's the most important, which sounds crazy, but it's true. How do you manage a position? Well, we can talk about that a little bit, but in the context of what we're going to be talking about, you kind of get it when we talk about wide range bars and reversals and money management. I mean, so many. I've been doing this, I guess over 30 years, starting alone, again, as we all do, learning, and very few even think about money management other than how much money can I make, and pressing that button. But what about the risk? And this money management is so connected to your trader psychology. And we just don't get it when we're starting out when it comes to the markets because we're so fixated on the greed aspect of it. But once we start experiencing some losses, all of a sudden the light bulb starts to go on. You start thinking about it, but so many get blown out before they even had a chance. So these are really important parts of being successful, and recognizing that you're kind of dangerous when you're starting out. And if you approach the markets from that point of view, meaning learn a method, learn the basics of money management, share sizing, what's your calculated risk, and so on. And knowing that you don't know too much at the beginning, you will take it slow, you'll learn, and you'll last. Right, candlesticks. Well, here's kind of the hype behind the candlesticks. Japanese candlesticks to determine who won the battle, and they've got all these names, which we'll take a quick review of. But as we start to look at candlesticks in what I call a bar by bar type of analysis, and candle language, they begin to speak to us about what's happening within the time frame that we are observing. Now, recognize and accept the fact that as you change time frames, these pictures change. So we need a method that says, okay, this is the time frame that I'm going to get my bias from. And there's always this kind of give and take as to the things that we learn. I'll give you an example that happened this morning when I mentioned pre-market, and then in the green room pointing this exact concept out. So pre-market, we talked about power bars and them being a weak link. And you say, well, how could a power bar be the weak link? And we get in and talk about price voids. And I mentioned that I pointed out that the Russell index had a big move down, a wide range power bar, and was stabilizing. And I showed the intraday time frame. And it's like, okay, here's this void concept. And this is kind of your void concept right here, where prices came down hard and then this time correction. And as they started to move up, there was nothing to stop prices from moving higher. And it was the same concept with the Russell this morning, was that, and we'll take a look at it, it came down real hard a couple of days ago, it stabilized. And then if the markets were going to go up, and part of our analysis was the seasonality, the bullish seasonality right now, with the holiday, the 4th of July holiday, and the end of month, beginning of the month period, that coming together, typically the markets are bullish. And so we're seeing that following through today to varying degrees. So again, they speak to us in a candlestick format, and primarily what we're going to focus on is today larger bars and potent reversals. Now here's a whole bunch of names. Candlesticks, piercing patterns, thrust patterns, Haramis, crosses, inverted hammers. And when we start out and we go to a candlestick website or pick up a candlestick book, and we start looking at these names and start thinking, okay, I need to know these names and these pictures and what they mean. And then the candlestick gurus get into the probability of certain patterns, these names following through. Well, in a basic level, that is true. But to really understand the difference between these, and we'll get to it. Let's see what the next slide is. It's really just about retracements. So everything that we do here is to boil things down to a very basic understandings to make it simple, stupid. If I can understand this basic concept and then pick the time frames that I want to trade and then recognizing the trend and price voids, the whole idea about trading is to put the odds in our favor. And then how do I discipline myself to waiting for my pitch, so to speak, or when I recognize the odds are in my favor. So this is what trading plans are about. Putting together a method so that you say, hey, you know what? When these things are lined up in a certain way, the odds are in my favor. So I take that trade with a calculated risk because I know that there's no guarantee that these things are going to work out. So the idea behind what we do at Master Trader is to recognize that these patterns are more than just names. So whether you call it a piercing pattern, or I call it a bullish 180, or a bottoming tail, or what have you, it's a representation of what other people are doing. Okay? Whether that's a hedge fund, whether it's a prop trader, whether it's you or I that are pressing a button, these candlesticks form pictures that tell us what other people are doing, what they've experienced. And the advanced part of what we're going to talk about today is when we get these little failures. Right? And I'll get to that. So as I said, it communicates to us how traders have acted. What are their beliefs? So when I see a big green bar, it creates a belief for myself that buyers took control in a pretty aggressive way. And that suggests that prices should continue in the direction of that wide range bar. If you want to learn a little bit more, if you haven't read it, go and look at the chart of the week from last week. I did a little video and some write-up about that. It's on the site. Just go click on chart of the week and you can review that. So they create pictures. This is what we do. We can have fancy names for everything that we do, but basically we look at pictures. And the idea of pattern recognition is that this picture that I need to define that picture as to what is the probability of this picture that is now suggesting to me the direction of prices actually following through. That's the essence of what we do. And again, these pictures speak to us in what I call candle language. So for those of you that are new, and are like, what is this candle? Where do I light the wick? Right? It's not that kind of a candle, of course. So this basic slide just shows you an open and a close, and we get to color these candles the way we want. Most are going to make them red and green. Some people like blue or white or black. It doesn't matter. And the thing is, where's the open? Where's the close? Where's the high? Where's the low? These tails, or sometimes they're called wicks. Maybe I'll take a look at the Dow and you'll see a couple of days ago, you have big wicks on the top and big wicks on the bottom, little candle bodies. Oh, what the hell does that mean? We'll get to that. So again, if it closes above the open, I'm going to make the body of the candle green. Right? This is the body, the distance between the open and the close. And if it closes below the open, I'm going to color it red. Now, what I'm interested in is how big is that body? How big is that tail? Are there no tails? Right? So is it that decisive that it closed on the low of the day, which would communicate to us that sellers just kept hitting the bid right into the end of that time period, the end of the day, the end of the last 5 minutes, the last 30 minutes, whatever the time frame is that you're using. So here I got a whole bunch of names, and I call it, here's the candlestick height, the different names. But it comes down to retracements. And so when we're looking at like this one here, bullish engulfing pattern. Right? Which means that the one body engulfed the other body, but it gapped up, gapped down, and it closed strong, or vice versa. So when we change time frames, these pictures change. And that's the essence of this slide right here, is that if I compress it where I get one candle, or I expand the data, I'm getting two candles, or I expand it further and get three candles. Well, this one might be called, if there's a picture of it here, I don't know if that's a bullish Harami. If I remember my names, that might be what's called a morning star. I really don't remember anymore. This one is just a bullish reversal, but whether it's engulfing or it's a tweezer bottom, who cares? This one, as I drew it out, closed on the low. It opened here and it went all the way back up again. But the takeaway from this slide here is that they all went down and they all went back up again. So my experiences from the past, maybe some of you experience the same things as you learn about these candlestick patterns, is that, hey, the last ones that I saw that had this small body with a tail on the bottom, that worked out really well. So you start looking for that picture, normal, right? Reproduce what worked in the past. That'll help me make a decision in the future. Well, all of a sudden, through your learning process, you start seeing that prices moved up or down, and you didn't have your picture. What do? Well, you typically, what I did was start searching through different time frames to try and figure out what happened there. And so then I found out, well, maybe I was focused at that time on a 5-minute chart, and I found out that a 7-minute chart formed my bottoming tail bar. I'm just making up things here. And so now the next day I'm looking at the 7-minute chart and I don't get my bottoming tail bar. Okay, what's happening now? Well, I find it on the 15-minute chart. All of a sudden I'm looking at 8 different time frames and my head is spinning. So the takeaway from this slide is to recognize that as you expand data and contract data, the picture is going to change, but the meanings are going to be the same. So all of these names here, right, it went up and it went down, or down and it went up. Who cares about the names? Whether it's a bottoming tail bar or a 2-bar, where we would call this a 180, or this 3-bar, call it whatever you want. It suggests it's going to go up. It's about the retracement concept. And it went down and went all the way back up again. Again, we have to look at this and say, well, where is it in the context of support and resistance? We'll get to that. Right, so continuing to simplify the hype from this candlestick idea is, are the ranges expanding or contracting? And so when you have narrow ranges, it communicates that momentum is slowing down. Right? There's just not much happening, especially if the bars are overlapping each other the way this is displayed. And then there's big candles, wide ones. Doesn't matter, call it whatever you want. And this candle here is big compared to those. Now, if I was to take this and drag it over here, we start to put together pictures that become more meaningful. So the takeaway here is just to recognize the simplicity of this. Small, narrow ranges communicate that momentum is slowing, and big ranges tell us that momentum is increasing. Now we start to put these candles together, bar by bar analysis, that communicate to us this candle language that says, hey, nothing was happening here. Now something's happening. What's happening? It's a big green candle that says it's going to go up. Go up to where? Look to the left. If we just took the big red candle and dragged it down here, that's a breakdown. It's going to go down. Simple. What if I take one of these candles, which it went up and it came back down again, and we take this and now I drag that over here. What does that communicate to you? If this is a consolidation, I take this red or green, if I take the red one and I drag it over here, let's back up a little bit, kind of maybe try and drive the idea home. You're in XYZ and you're long and you're waiting. And here's this red candle right here. Maybe you start to get a little nervous because it's a red candle. It's red. Well, red candles are bad if you're long. Maybe. And now it turns up, and this candle, let's call it either one of these, right? As this is forming, I take this green candle and I drag it over here. And let's just say this is your daily time frame and it's 1 o'clock in the afternoon. It's like, great, big green candle up near the high. Well, you still got several hours to go. And then at 4 o'clock, you have this candle and you drag it over here. Do you see how this is now shifting your thoughts as to what's happening in the moment? So you have to recognize that if you're swing trading in a daily time frame, and if it's 1 o'clock in the afternoon, that candle may not close like that, may not look like that at 4 o'clock. And that's something that I experienced many years ago. It's like, hey, this thing's going up. And I press the button. Many years ago, you had to pick up the phone. And, at 4 o'clock, it doesn't look like that. What do you do? So you need to have a setup that suggests what's going to happen before you press that button, right? What about a large gap up with a red candle? Okay, so if we took this candle, the idea is going to be the same, Gary. It went up and it went down. So if we take this candle and I drag it over here, right? The open is here because it's a red candle. The close is here. So whether I take this and I drag it over here where it gapped up above this consolidation, and then it closed like this. And the close could be on the top of this bar, or it could be closing at below the red bar. So there are different degrees as to how bearish that gap would be. So if I took this one, as you're asking, a gap up in reversal, or I took this topping tail bar and dragged it over here, prices went up and they came back down again. Now, where does it close? And if I drag this over here and it closes on the top of this consolidation, it's not as bad as if I took this and it engulfed this consolidation and it closed below it. So to a more bearish degree, right, what I just explained, the latter, common sense. It shouldn't have done that. Right? It shouldn't have done that. Why did it do that? We'd have to start looking at more information, meaning, was this forming after a run up and it was extended? It was at resistance. So we're talking about one technical concept here to understand what these individual candlesticks mean. And as we start putting them together. And so if we were to take the bullish ones and were to drag this over here, and that this tail was below this consolidation, but the top of this bar was above the top of the consolidation, it went down and it went right back up again. So what happened there? Well, even though it broke below what we would call support as a part of our discussion, and it might be a mystery to us as to why buyers showed up, since we might be looking at that and say, hey, this thing is breaking down. That's not positive that it broke down under that support that it was holding. Okay, but by the end of the time period, it looks like this candle and we dragged it over here. Well, there are many different ways to trade. There's many methods, meaning that when that broke down, some institution said, hey, it's cheaper than it was yesterday. Let's buy it. And they drove it right back up again. So what others are doing is really irrelevant to us. All we need to understand is that this candle, as I explained, and I put it over here, somebody was lurking down below saying, hey, buy it. And then they got more aggressive and they started, if you're looking at a level 2, maybe they were bidding for it down there. They didn't get filled and they start taking the offer and they drive it all the way back up again. This is what we want to look for. So when we talk about advanced candlesticks, we're looking for these little shakeouts, these little points in time where something happened that was a shock. Maybe in our minds, it shouldn't have happened, but it happened. But that's new information that is going to help us tremendously. So these are different examples of what I'm talking about. And we call them events. And it's just something that's like, wow, here, it went down. It was closing relatively near the low. The next day it gapped up and it closed here. This is a powerful combination of candles. And this happened, and notice if we started talking about bar by bar, these bars here, this is a big bar. It's a power bar, suggesting it's going to continue to go higher. And then there was a resting period. Often happens after a power bar. All of a sudden it goes down. It's like, what is going on here? That's not supposed to happen after a power bar. Okay, I don't know. It is what it is, right? I can't explain it in the moment other than to say, hey, on this given day, maybe it was just a bearish day. The sector was bearish. We don't know. But because the trend is up, let's assume the trend is up, this red bar theoretically should not follow through in a very big way. And we see the next day, it gaps up and closes strong. That's a signal. Here's another one, bottoming tail bar. Broke below these lows. Why did it go down there that day? Who cares? At the end of the day, it looks like this. It tells us that there's buyers down below. There's strong demand on weakness, and they drove it back up again. It could be, Matthew. I'd have to look at the futures, but I take your word for it. Matthew's saying on the 1 minute NASDAQ futures were like that today. Yeah, so there were a lot of wiggles this morning because there was news at 10 o'clock. So there was these jiggles, but overall, things, have been pushing higher. Let's look at some charts over here. Yeah, spiders are still near the high of the day. Qs are near the high of the day. And the Russell and Dow are weak. So we got these markets that are going in their own direction. So here, different examples. Call it what you want. These are bullish events and bearish events. They happen in different ways, so we can't get hung up on the names. Right? But we can make names. We can make names for this, for these things. So this one was bearish. It closed under all the lows, and the next day it gapped up and it closed above the highs. It went down and it went up. 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 Turn them upside down. Trend is down. It's got room to go below. It went up and it went down. It's so simple, but it's so powerful. I think this is our last candlestick slide. So as prices get extended, keep it simple, stupid. Prices get extended. What does extended mean? A whole bunch of bars that went up in one direction. So it's a fluid move. What does fluid mean? That means it generally opened up in the area of the prior candle's close, and it continued in that direction. So you got a whole bunch of bars that did that. How many bars, Greg? 3, 5, 10? I don't know. You'll see whatever that stock does or that index does, it'll keep going up until it stops going up. Well, how does it stop going up? Well, what this shows you here is different ways of recognizing how potent a reversal is. So in the time frame I'm looking at, common sense, hey, it's a little narrow bar. That's not very potent. Do I want to short that? I don't think so. It's not that convincing to me. Even though it's extended, it could become more extended. All right. On this one, it gapped up and it closed deep into the green bar. So if prices are extended and prices gap up, there's going to be a greater tendency for traders and institutions to sell into the gap up and take their money. This one, it traveled up and it went back down again. So I'm repeating the same concepts here as we're looking at different candle pictures, and now we're putting these reversals in the context of something that's extended. Now, as prices, yeah, we could look at a few charts. I'm going to get to that, Gary. We've got to lay the groundwork here. This is how we teach the MT Lives and how we teach in our courses, is that we lay the groundwork with some concepts, candlestick patterns, reversal patterns, shock patterns, the location of those patterns, or are they extended? And as we start putting that together, we're creating this method that's worked for many, many years. Took a long time to figure it out, but so here we're saying the most potent, a wider bar, and some of the wide bars after prices get extended suggest the move is getting close to the end of the move, not the end of the trend, but the end of the move. I think I explained that in this chart of the week, so you should check that out. And so here, it went up, it came back down, and then the next bar is going down. So I don't know, you don't know on any given day which pattern is going to play out, but I know how to interpret whatever pattern forms. That's the whole idea. So we'll look at a few examples and we'll look at some charts. Right? So in this example, when I see prices, you can scan for gaps every day, right? So when we scan for gaps, we have to look at how far did it gap up, what preceded the gap, is it gapping above resistance? If it is, how much, and so on, and what pattern formed. So as I look at this chart, where there was a lot of sideways price action, which communicates indecision and confusion, and then it breaks down. And notice this candle right here. So here's an example of what we were just talking about, that it was going sideways and it takes out the highs. It comes next to the next resistance area. We don't know. It could have closed up there. We could have got a green candle that closed up there, and that would have been positive. We would have expected it to break above. But intraday, during the trading day, where this was a big green candle, and it opened here. See, it opened here, it closed there. So when it opened here next to the green bar's close, buyers came in and rallied prices up here. And when it reached this resistance area, sellers became aggressive and knocked it back down. And this chart is a great example of why most of us, if not all of us, get a little crazy with these charts, because we want to see prices continue to do what they did in the past, because that created our expectation of the future. So when this bar formed, it suggested prices would go down, and they did. Now, as they continue to move down, here's a support area right here. Right? So our belief system, based on our method, is that when prices get down here, there's going to be some buyers. And if there aren't a lot of buyers, it may chop around sideways and then continue to go lower. Well, this kind of ground its way all the way back up again. And so when it reached the same area and it got a big, nasty red bar, it's like, all right, it's kind of crazy. It is what it is. I don't know what this is going to do. Maybe it goes back down again, but then it gaps up. So I'm explaining all of this to you to put this gap up in the context of what preceded it and why this was a bullish gap. It gapped above the high of a red bar, and it gapped above what was a sell area for several months. It should keep going up. It's starting to make sense. No indicators. You don't need indicators. Gary, you say Gary Lynn, you're new here to us. We don't look at indicators. We just look at the price action and we look to the left because indicators just lead to confusion. All right. So these tradable stock and option trades, well, which is it? Well, this gap up here was clearly bullish. Here's a pullback pattern. It retraced. Apply the bar by bar analysis. Momentum slowed down. Bottoming tail bar. It's a buy. Plain and simple. It's a buy. It should keep going up. Look at this gap up reversal. Very potent bearish reversal. What do I do with that? Well, at that point, I'm not going to short this, even though I see that this went down. But you could do a call spread that's expiring ideally 1 day, 0 DTE, 5 days. So prices get extended. You get a gap up reversal. It's $170 stock. That's good. Looks pretty liquid. You go and you look at your option table and say, okay, are there premiums up above this area where I can sell one option, buy another option, get a credit, and I get to keep that credit as long as it doesn't go up there by the time the options expire. It's that simple. And it'll be the same thing here. As prices consolidated and then broke down, you could do another credit spread. This is what we call a 1, 2, 3 continuation. So that could be a short under that low. And again, it came down to support and it begins to rebuild again. So you're constantly looking to the left. Is there a void? Where's support? Where's resistance? Looking at these patterns and these shock patterns. And like that's a shock pattern. It gapped up. It was in an uptrend. So when prices are in an uptrend like this, the expectation is going to continue to go up and up to wherever it's going to go. If it's new all-time highs, who knows? So a gap reversal, big red candle like that, engulfing candle, if you want to use that word, engulfing all of these bars, bodies, 4 of them, it's pretty potent reversal, suggesting it's going to retrace further. All right, another retracement concept here, pulling back into this support area and the moving averages. So some more slides. Right. Look, here's a big drop. Applying bar by bar analysis. Look at the breakdown, potent reversal. So we looked at a static slide like this, or an example. It went down and it came back up again, but it's still in a downtrend. Where's resistance? It's right here. I don't need any fib lines, VWAPs, trend lines, anything. All I need to do is look to the left. And that red dot there displays a bar with 3 lower highs to the left and right. We call it a pivot. Some platforms call them fractals. It's a fancy name for a bar with whatever number of bars to the left and right that you want it to say. So if you have a platform and they call it fractals, or if they call it a pivot, you just set it to number 3 and it'll put a dot or a triangle or some kind of mark on the top of that bar. And we recognize, that it went up and it came back down again. And that makes us believe there's going to be sellers there again. And so in the area there was, and it came back down. Now, by this reversal, right, the trend is down. It could take it out. I don't know what it's going to do, but it flips right back up again. So at that point on this retest, you might want to do a put spread, meaning I'm going to sell a more expensive option. I'm going to buy a less expensive option, and I'm going to get a credit. And I'm going to look at how much time to expiration there is. And I'm going to look for something down below here. And I get to keep that credit as long as prices don't go down. That's the essence of a credit spread, plain and simple. As this went up and it comes up to the pivot high, my expectation is there's going to be sellers there. So I do not buy up here. And I don't buy if prices did this. Let's see here. If prices went down, some people call that a breakout. And I won't say it's not a breakout because it cleared the highs, but when prices go down and they retrace more than 100% and take out the high, odds are they're going to stall. And at that point, if they went up like this, where are you going to put your stop? So we don't enter there. We wait for pullbacks, situation like that, and look at that potent 180 reversal. And we call that a potent 180 reversal. It retraced 100%. That's a buy, put a stop here. And it's a big bottoming process. I'm expecting it to stall there, so I might sell half my position up there and then start trailing some support area. Now, you might say, well, why did I pick that bar? Well, because this is this bottoming tail bar, right, where it proved to me that there were buyers on the dip. And I don't want to get right below this bar when it's at resistance because I'll probably get stopped out on a wiggle. Right? Now we got to wait and see what it's going to do. Now, let's try and reinforce this idea that we're talking about with this bar by bar analysis. Right? So let's do this now. Kind of. And you're going to you should start getting the idea here of what we're talking about and how to put this together yourself. So now, if you saw that picture, it's extended, a little bit extended. It's up at resistance. And now, based on that strength and what was explained here, we have a belief that we think prices could go up, especially if they can clear this resistance area. So how am I going to get on board with a reasonable stop loss? I need a picture. I need a pattern that supports my belief. So there was a red bar, and then this bar is a bottoming tail bar. It went down and it went back up again. So my belief is now, if it can clear that, it should not go back below there. Simple. Buy, stop. Where's it going to go to? This is called a void. It has the potential to go somewhere up in here. That's a reasonable trade. Reward to risk. Get it? All right, let's continue. A few more. Breakdown, it went down and it came back up again. So that's a potent reversal suggesting it's going to go down. It did. I could create a belief that it's going to go down, but I need a setup that if I might want to trade it. I want to trade this. This broke down. Right? This was bullish. It breaks down. Now I need a setup to short it. So let's do this. I need a setup to short that. Let's do this, right? Kind of wipe that out. What kind of candle would I need? Would I want that would put the odds in my favor to short that? Could be a lot of different ones, right? What we want is it went up and it came back down again. Well, it could be a topping tail. Exactly, Kim. It could be a topping tail. It could have gapped up. It could have gapped up above this bar's high. It could have gapped up above here. And it gapped up and closed like that. I don't know what it's going to do, right? But where I'm leading you here is that if you can get one of these advanced candlesticks events, right? If that is in the cards for you or me at that moment in time, I know what to do with it. It's shown me that there's an overwhelming amount of sellers supply up there, and now short it under the low, put a stop above the high. Now, because we looked at this, we know it didn't happen. It winds up recovering. And it's like, what the hell? What kind of screwball stock is this? And so it's just the way things are. It came back up again. That dipped down for whatever reason it happened, bad day in the market. Maybe this was the bad day, and then it followed through and it came back up again. So you apply the concept of bar by bar analysis, what we're talking about here. And it's like, okay, it went down and it came back up again. It retraced a lot. Now it tried to go down, bottoming tail bar. It tried to go down, bottoming tail bar, red bar. And this is your signal bar right there. It opened there, and now you get the range expansion. So we're putting together what happened down, up, bar by bar. And this bar now tells me it's time to act. This bar told me pay attention. And that one said pay attention. And that one's like, maybe it's not going to happen. This kind of crazy price action that occurred here. But now this is a decisive bar. They was buying right into the end of the day. And so this is the recommendation, right, in the advisory letter, and it explains why. And everything that we recommend in the letters explain what we're doing, why we're doing it, so that you're learning. Join us in the green room. $7 trial. Spend a week with us. Well worth the $7 for the education. Spend some time, learn, watch the trades. A lot of good traders sharing their ideas. You can check that out. mastertrader.com/green trial. A few more examples. I want to get to look at a few charts here, but you get the idea. Right? Now it's just wash, repeat, wash, repeat. What is the trend? Up, down, or sideways? This is going up. Right? Look at this bar. It tried to go down. Bottoming tail bar. The next bar is an inside bar, green bar. Wide range bar, decisive bar. 1, 2, 3 continuation pattern. Now look at that bar. That is what I call, right, the money bar right there. Because it took out that low and it popped right back up again. Right? So 1, 2, 3, 4, 1, 2, 3, 4, 5, whatever. Right? It's a wide range bar. It broke out. It's consolidating. That is your action bar to get on board. All right. Is a 1, 2, 3 pattern. This is just a big mess. Wide range bar. So we're looking for these big bars. Wide range bars, big bars. Events. This is just a lot of consolidating candles with tails and overlapping bars. This one is a little bit of a heads up right there. It broke the lows and it came back up again. But it's not so clear. Right? This is clear. You can't mistake the size of this bar compared to the other ones. It's a power bar. And then this resting period, and then here's your void concept. Down, sideways, up. I'm not going to go through this. You're getting the idea. I'm going to look at a few live charts to spend time for what you guys want to look at. Another concept of the void, wide range bar. It gapped up. Right? We talked about this a little while ago. It gapped up and it closed below the lows. It's a big bearish bar. And it went sideways and cleared the highs. And notice the little wick on the top of this bar here. So it tried to go higher, and then for whatever reason, it just got crushed. It's bearish. It's black and white. So you could do a call spread. If you short it, you've got to put a stop up here. That means you need to share size it accordingly. It should go down. Again, over here, it begins to rebuild again. So these dots, there's nothing magical about them. It's just simply a bar that where you've got 3 higher lows. But why is it powerful? Because it now has created a support point that this is all part of the thought building process. Once it builds that support point, Let's just see here. What I'm going to do, what I do, and now put a horizontal line. No diagonal lines, no trend lines. Everything is looked horizontally, not diagonally. Once it formed that pivot, it now creates a thought, a belief that buyers would show up there again. Well, how many? I have no idea. Now we have to apply our bar by bar analysis. Red bar. All right, let's see what happens as it comes down there. Green bar. Okay, still not decisive. And then a bottoming tail bar. So as we put together the bar by bar analysis, this went down and it came back up again. If I was to compress this, remember the slide, 1 bar, 2 bar, 3 bars. If I compress this, I don't know, this is a daily chart. I can compress this into 3 days. I can compress those 3 days into 1 day. Then you'd get one bullish bar. So trying to drive home this idea of recognizing retracements and multiple time frames that it went down and it went back up again. And this building, this support area, this is what got our attention to look at this. Right? This was an ETF. I don't remember, Dan, it's not marked on here which one it was, but this was the idea why we wanted to buy that. Guys are kind of quiet. Let's see here. All right, you're getting the idea here. Wide range bar up. So we scan for wide range bars every single day. Right? It's in the scans. Look for the wide range bar. Look at the bar. Put it in the context of what preceded it. It went down and it came back up again. Resistance area, consolidation, sudden alert above the highs. Notice this bar, it gaps down. It opens right lower, and then it comes back up. Your alert goes off. I know what to do with that because what it did here, it went down and it came back up, and it's a bullish bar. It gapped down and came back up again. And here's a topping tail bar. It took out the high. It's a weak stock. It was the recommendation, short the stock on the breakdown. And that was the management covering it on the way down, when to move the stop. All of this is updated in the member area as well as in text messages, and we send these charts with the explanation as to what's happening. Everything we do is to continue to educate and reinforce what you learn. And breakout failures, wide range bar, 1, 2, 3, breakdown area. Once it comes here, they're going to be buyers. We'll see what it does. Maybe it keeps breaking down. You can check out the swing trading course, right? mastertrader.com/swing trading. Check it out. And all the other courses. I'm going to turn on my screen. We could look at a few charts here. And let's see here. Let me pick one. Screen. Okay. All right. So I got different layouts, this doesn't have too many scans in it. It's just to recognize where money is going into or out of here. You can just sort this by percent change on the week, on the day, if there's a wide range bar, but none of the layouts with different scans. So you can see here's Apple, and here's your potent 2-bar reversal. There's your potent 2-bar reversal right there. Big red bar suggested that it would go lower. It's in an uptrend. It's in an uptrend. And it gaps up and closes above the bar's high. Now you got to wait for it to get close to the bar's closing price, because as I said, this could be like this at 1 o'clock, and then at 4 o'clock, it's a topping tail bar. So you got to wait close to near the end of the day to see if it's going to close like that. And because it's in an uptrend and this 2-bar reversal, it creates, right, a belief. That's what trades are. I'm creating a belief that XYZ can go up or down based on a picture. That's as complicated as it is. I'm not saying it's easy, but you need to have this method that defines trends, support, resistance, voids, and so on. All right. GDX, asking. So there, yeah. So oil today, I believe, is at the top. Here's GDX. I got this sorted by weekly percent change. If I sort this, well, TAN is coming back today. That thing's been a dog. Here's GDX at the top there. And so GDX is the gold miners. So here's a bottoming pattern. I don't know where this is going to close, right? But so far we got a wide range bar, and that's a signal, right? Where this was just a lot of sideways chop. It's now cleared the highs, and I believe it's going to go up. Now I've got the weekly and monthly timeframes here. So look at, you got a little buy setup here on the weekly time frame, a pullback to support in a rising 20. We'll see how it closes on Friday. But if we were to get that number 2 bar, which would be on Friday, we were to get that number 2 bar, it's at resistance, but the depth of penetration into this resistance suggests to me it can go higher. Now, here are the stocks. And when I click any of this, it loads the stocks within that particular ETF in this minder. And I can start looking through these and just say, well, what's the strongest one today? Just sort it by percent change. And then we got to see the pattern. It's gapping up, from a pretty big decline. I'm not really interested in that. That's more interesting. It showed relative strength. It was hugging the 50 MA, and this is gapping up. If we were to get a 1, 2, 3, or just to buy this, above that bar's high or near the end of the day, a starter position, that looks like it's going to go higher, and so on. So you start doing the same thing over and over and over again. Right? We looked at Apple, Tesla. It's been going up for days. We covered this. Dan spoke about it in pre-market. But, we were trading this over here, and we were getting wiggled out here and there. This breakdown and reversal. Finally, you got this pattern. Look at the bullish 180 reversal there and this consolidation. And, once it hits the 250, there's probably a lot of open interest and options there that typically are at those whole numbers. So now it's vertical, it's extended, but extended, it could get more extended. Right? Maybe it goes to 260 on Friday, but right now it's going straight up. And looking at the weekly, you see coming up to that resistance is definitely going to run into a wall there. But the monthly, a nice bottoming pattern, and that looks like if it can consolidate some gains over here, this should continue to go higher. COST, still bullish, right? Still bullish. 180, it's been going up quite a bit, but it's still bullish. It should continue to go higher. But you can see, this is at all-time highs, new all-time highs. It's been consolidating a bit, but what can I gain from this? Well, I'm just going to set an alert below those lows because it shouldn't go down below here. And if it does, I'm going to want to know. That looks great. TTWO. You know what, JR? I would watch this for a turn on Friday. And the reason for that would be you got these converging moving averages here. Electronic gaming. Let's see if it was a sector that doesn't really mean much to me, the sector that it's in. But I would watch this to see if it reverses down here. Overall, it's really not that attractive a pattern. There's no reversal bars here. So I would, I'll just set an alert and see if it turns there. One thing I'd like to hear more about is the 2-bar reversal. Some criteria to use for it. I occurred yesterday, and Q's futures 60-minute. This platform doesn't have futures, and my other platform is loaded on the other computer. You didn't say which market, Matthew. We can look at, as long as it wasn't pre-market, doesn't matter. It's the same thing. And I don't know what time frame, 60 and 15-minute you're saying. So same things here. Look, it went down and it went up. Gap down, reversal bar, bottoming tail bar. It's at resistance. So there's no void. There's no void. Tell me in the cues and I can associate it to the price at the same level. But if you apply what we're talking about here, this bar by bar concept, right? This, look, the topping tail bar. First of all, the depth of retracement here is positive. If we compress this, I don't know, I'll just say a 4-hour chart. Yeah, it really doesn't change it too much, but you get, what I'm trying to get at here. This bar here, this move down and bottoming tail bar is exactly what we've been talking about, right? This is telling us that there are buyers on dips. This topping tail bar is being negated, so to speak, or ignored. So this morning, as this started to move up into all-time highs, just look at this overall, this pattern here. Again, it went down and it went up. Wide range bar. There's your big bar. Odds are it's going to go up. Right? So you're saying you want me to look at this period, this point right here. Why is that not marking that? All right. And then on a 15-minute chart, again, whether it's a bottoming tail bar or it went down and it went up, it's just as you change time frames, the pictures change. But if you get this idea of a retracement, 100% retracements, 90% retracement, and it went down in an uptrend, there are going to be buyers there. Look here, again, as you change time frames, the pictures change. The meaning of the bars don't change, right? Within that time frame, you're getting, here, look at that bar. It gapped down and it closed like that. Just because it was a bearish gap down, what this communicates to you is that buyers could care less. It was cheap to them, even though it gapped below this support area that we looked at the slide and we talked about that. It gapped below that. Nonetheless, it closed with a wide range bar. That has created your bias. And unless this bar gets negated, you should have a belief that buyers are going to continue to step up and take control on dips. And that is what happened. So as prices are moving up, you now need the position and money management part of what we're doing here. And we're talking about price action. What are you going to do with the position once you're in it? So the swing course, of course, the advanced money management course explains to you how to manage these positions. Right? So once you've got these pivots here, the green dots, I explained to what those are, right? 3 higher low bars. It forms a support point, a new support point, and you just continue to mark it off. And that's what we call major support. Look at this bullish 180, this bullish 180 reversal. It's working on another 180 reversal. The 15-minute time frame has, a 15-minute up there anyway. Yeah, I do. So you got to have a timer. You need a timer to know when the period ends. So there's 9.5 minutes to go in this 15-minute bar. So as an intraday trader, you need to know 15-minute, little timers, softwares, most of them come with it, or you can put some kind of little add-on on there. You need to know because this bar, say this bar keeps going up, it's not done yet. And it triggers, and there's 9 minutes to go. It could be a topping tail bar at the end of the 15-minute time period. So you need that little tool. How much time is left in my 15-minute bar? So that's a little tool that you need to add on there. So the trend is up. This is major support. It's at new all-time highs. At this point in this time frame, there's no reason to think that this trend is over. just continue. Well, it's after 1 o'clock, it's over, right? Market's closed now. So I hope you enjoyed this. I hope you guys have a wonderful 4th of July. Enjoy the holiday. We'll be here on Friday. And of course, we'll be back again with another MT Live. As always, if you have questions, email me or Dan and Greg at Master Trader. Bye-bye.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.